Hey everybody, welcome to Trading Capital's exclusive analysis on the Chinese market. So today we got, or I should say last night we got hit with the news of Evergrande defaulting yet again on repayment of their debt to the point that there's roughly about 20 executives, CEOs, CFOs that have now been detained and arrested by Chinese local authorities. So what's the importance of that? Well, the real estate market in China has been made up of these ghost cities, or at least that's what the propaganda and news that we see here in North America. And it seems that these ghost cities are actually coming to fruition. A lot of the developers, like Evergrande, specifically, I believe they're one of the largest corporate giants in China, have now defaulted. It could be bringing more risk to the overall global economic landscape. And let's discuss this further using some of the chart patterns here. So the Hang Seng, the Chinese ETF, basically the Chinese S&P 500, closed down last night roughly 1.82% on the back of this Evergrande news. Now, why am I discussing China? Well, I actually think we're coming to a near-term horizon where we could start seeing accumulation of some of the Chinese stocks. Not all of them, but some specific areas. Think about it from a logical standpoint. When you as an investor now perhaps have a bunch of your money tied up in Chinese real estate and that's no longer safe, i.e. the default of Evergrande, what happens to that real estate money? A lot of investors in China like to liquidate it. And where could they place that money that is typically going to be a little bit safer than some of these ghost cities or developments that have occurred in China? Well, you look at Chinese tech, the likes of Alibaba, PDD, IQ, Tencent. So let's discuss this further. Obviously, if we look at the Hang Seng here, what I want to bring to your attention is you had this head and shoulders pattern, left shoulder, head, right shoulder. This pattern has triggered basically the downside target. Should take you to about 16,600 on the Hang Seng. Now, there is a chance that we don't actually get all the way down there. What do I mean by that? Well, if you look at what the Hang Seng is primarily made up of, it's very similar to the QQQ S&P. It's dominated by the tech giants of China. So what's interesting, if we look at some of the tech giants of China, PDD, on the news of this default, had a big ripper of a day, actually closing up 0.79%, diverging from the actual Hang Seng itself. And if you look at PDD, PDD had this similar head and shoulders pattern over here, which actually played out to a T. You've got rejected the neckline here, pullback. Now you're above that neckline. That neckline was tagged as support, and you're looking to actually make some higher highs in the trend. I think PDD is a likely scenario that you could see a move all the way up to about 120, 121 on the charts, or the high end of this parallel channel that you've really been chopping in since you made this March 2022 low. So I think we're at the near term going to see China tech stocks come out of this bear market, specifically because you're going to have likely the Chinese government print more money to contain this default. And secondly, you're going to have individual investors in China pull money out of the real estate funds, real estate REITs, real estate investments, and likely move it into some of these mega cap China names. You look at BABA. Although BABA did finish down 1.22% today, it did come significantly off of the lows after that Evergrande. Take a look at this intraday price action. Big gap down, and it basically recovered almost half of the losses it saw intraday. Now, China stocks are still very risky, being the fact that you do have this potential contagion that could spill over. One thing I'm looking at on the daily chart of BABA is you do have this head and shoulders. Left shoulder, head, right shoulder. You have triggered that, and you're looking to retrace. If you get a daily close back above this neckline, I think it's very safe as an investor to start accumulating on the long side and just keeping a very tight stop, maybe using this pivot low as your stop loss to cut off any risk. Now, the downside, if you get rejected off this neckline, let's just measure this downside quickly just to see where we would take us to. It takes us to about $72 on the charts for Alibaba. So we have to recognize that yes, there's potentially a bearish pattern at play, but I do think that this bearish pattern could be negated if you recapture the neckline. Obviously, if we look at the longer term chart, the weekly chart, take a look at this. A lot of people have been eyeing up this potential rounding formation that has actually been occurring for quite a long time. You have your left shoulder, your head, and this is building out a massive, massive right shoulder. So if this weekly pattern were to play out, then that likely means that we could see some significant upside in Alibaba. And this pattern, you know, a move from 57 to 123, that's about a $70 move from the breakout zone. We're talking about maybe a $190, $200 stock if in a blow off move. And certainly if you look at the revenue and profit that Alibaba is actually making compared to it was down here at its IPO prices, you know, its revenue is up significantly, exponentially, yet its stock price is down. So again, I'm looking at the longer term picture here. Alibaba's definitely on my radar for a potential long trade. I am watching it closely. Just recognize that Head and Shoulders at the low end of the charts do not have as high of a probability as Head and Shoulders at the high of the charts. So when we look at this basing formation on the weekly chart, this is an inverse at the low end of the range. It generally will have a higher probability of playing out at some point in time. But many people have been watching this Head and Shoulders really since you had this pivot over here, and Alibaba's just been chopping traders in and out on the long and the short side. Let's move along to some other names. You look at Baidu. Baidu's also trying to have a little bit of a move off of the lows. Baidu's a little interesting because you are trading underneath this trend line. Again, from a technical standpoint, if you get above this trend line, that would likely be and yield a bullish move to the upside. You look at IQ. IQ is another interesting one. This looks to be bearish consolidation, so you have to be very, very mindful and careful. But if my theory is right, this is another tech stock that could see a move off of the lows and funds reallocating and repositioning into some of the tech giants. You look at Tencent. Tencent actually closed positive today. What I'm observing in Tencent is you potentially have a little mini inverse Head and Shoulders on the daily chart that has not triggered yet, but it could certainly trigger in the coming sessions. So again, you want to pay attention to some of the standout stocks in China. When the Hang Seng, the XFI, FXI has such a horrific day, and you still have some China stocks that are yielding positive returns, specifically when you also have the backdrop of Evergrande, you have the backdrop of higher American yields, and you have the backdrop of a stronger US dollar. That is showing relative strength in the short term that you just want to note, because again, if that US dollar cools off, if the PBOC, the People's Bank of China, starts printing money or lowering rates to contain this Evergrande debacle, we could see tech stocks in China make an absolute face ripper move to the upside. On that note, please give this video a big like down below and stay tuned for more updates and analysis. If you're interested in some of the individual names that I'm going to be watching and accumulating on the long side, I have not mentioned them. I'm keeping them very close to my chest, but there is some individual stocks that actually have better chart patterns than the one I have actually just brought before